And now I'd like to introduce Janet Garufis, who's going to be my co-discussant. She is the chairman and chief executive officer of Montecito Bank and Trust in the beautiful town of Santa Barbara.
Thank you, Greg. I'm coming up here because this is how I always do public speaking. I don't know how to sit in a chair and do it, so I'm sorry. I hope that's okay with everyone. So when I was invited by Jim Fuchs to come and do this, this is a research, what's it called? Research and policy. I don't do either one of those things. I have done them in the past, but I don't do them now. And so I thought, well, why would you want someone like me? But clearly, I am square in the middle of community banking and small business lending. And those two intersections have been a big definition of my whole entire career in banking. So I really think what my goal is today in this discussion is not to provide you with an academic paper or my research, because I have that. I have none of that. And these folks have done a tremendous job of providing you with a really deep insights into what's going on, or has been going on, in the community banking sector and making capital accessible to small businesses. What I can give you is the benefit of my experience, and I have a very long history in small business lending. In fact, I was tapped on the shoulder to begin small business banking at Security Pacific National Bank back in the late 80s. And so what I'd like to share a little bit with you is why some of the observations I've made along the way about how we got here and some things I think maybe the researchers might take to consider as they go away and continue this process. Who knew anybody really cared about small business lending the way we do? I'm delighted to hear that you do, so thank you. And thank you to all of you for inviting me. So who am I? I started my career in banking in 1972 as a teller. This is an accidental profession. I planned to be a PhD in literature. That's what I want to do, is teach literature. And so school was I was going to get through school by being a banker. And it turned out that banking was actually kind of fun. And I loved the relational side of it. I loved talking to people and doing that. And I decided I would not go to graduate school. I'd just do the banking gig. And that worked out really well for me. I had the opportunity to go very deep and very broadly in an awful lot of things in banks, because when I started in banking, there was no centralization. We hand-posted the general ledger on a very large machine. We pay-filed checks, which astonished me when I walked into a bank. Everybody operated in their branch as if they owned that business. Every local branch of every regional bank was its own bank. And the branch manager had loan authority, something that doesn't exist today. And the branch manager believed that his job, or her job, mostly his, was to be part of the community, a community leader. And as time changed, especially when deregulation took off the ceilings on what interest payments could be made in the 80s, banks had to learn how to compete with each other. And business lending became one of the ways that that was going to happen. They had to lower costs, and so they started to regionalize business lending. There were regional commercial banking centers that were formed. And when that happened, the unintended consequence was that there was no one left in a branch who knew how to make a business loan. All of that talent was in these regional centers, and the only people left in branches at those days were people who knew how to make car loans. And that wasn't going to satisfy the small business lenders. So when Bank of America came to Security Pacific courting them and wanted to purchase them, one of the things that happened was the local advocacy groups, Communities for Accountable Reinvestment, ACORN, Green Lining Coalition, to name a few, some of them you may all still know because they are there, they protested loudly. And they protested loudly because Bank of America was not making loans to small businesses, and they couldn't get access to capital. And by the way, at that time, Security Pacific was, because I'd had the opportunity to start this little program. And this little program was called Advantage Business Credit. We credit scored loans to small businesses, and we started to grow our loan portfolio that way. So even though we were doing it in a central location with centralized lending authority, we used our branches and our branch people as the outreach and the access. They provided that relational touch that's so important, that you've all said is so important to small business lending and making capital accessible to small businesses. And that little experiment turned into be the reason I got to keep my job and take my business from Security Pacific to B of A. And I was able to grow that business to become the National Bank of America Small Business Lending Division. And we grew the portfolio from $750 million to $4.5 billion in 5 years, and the average loan size was $44,000. That's a lot of small business loans. That's a lot of capital that was made accessible to a lot of businesses, and we really believed that we were helping people finance their dreams. I think community banks are still doing that. They still operate under that impression. They're there because they're committed to the communities where they do business. They're committed to their customers. They're not just relational in the way that they know a little bit about the business and they go out and call on them. They sit next to them in church. They see them in the grocery store. They're volunteering at nonprofit organizations across the counties that they operate in. They're all in it together, so to speak. And that makes that relational business very sticky, very, very sticky, even in times of trouble. And the best example I have of that is in our market. My bank has grown dramatically because we lost the largest community bank in our market. The Santa Barbara Bank and Trust was a 50-year-old community bank, locally founded, and really locally owned in lots of ways, in that the shareholders were everybody who lived in the community. And when that bank nearly failed, and people lost literally their pension, their entire investment, people took it personally. But even though they lost money themselves personally, they couldn't bring themselves to leave the people that served them in that bank. Even now, nearly 5, 6, 7 years later, I have people who are still coming to me and saying, gosh, Janet, you know what? I really have to leave now. I can't be there anymore. As much as loyal as I am to the old Santa Barbara Bank and Trust, now Union Bank, I just can't be there. And so I guess the reason I'm telling you this story is because I think the part of what I know about community banking and about community lending, specifically to small business, is informed by years and years of experience of watching what's happened in the evolution of the banking industry. And I will tell you that some of the questions that you had all posed, first of all, Dr. Cole said that small business lending is depressed. And I can tell you it is depressed, and from the time that I got to spend on CDAC over the last 4 or 5 years, one of the things, the first question on the Community Depository Institutions Advisory Council questionnaire every time we meet is, what is the state of lending to small business, and is small business lending considered to be constrained? What's constraining it? And I have to tell you that for the time that I spent on CDAC, loan demand was low. It wasn't that there wasn't suitable financing or there wasn't credit available. We were dying to make loans to anybody who wanted one because we needed to. But small businesses would not take credit. They were worried. They were concerned about expanding. They were unsure about what's going to happen with their taxes or with the ACA. There were a lot of things that were constraining them, and they had been impacted by the financial crisis just like everybody else had. So it isn't that there wasn't loan money available. It isn't that banks didn't want to lend or stopped lending. They were distracted. The mergers and acquisitions in any particular county, I think that paper was really interesting. On the ground, when you're on the ground, what's happening? If you're a bank that's being acquired and you are learning a new culture, a new system, a new process, you probably don't even know what the loan products are that you're selling. You may not even know how you get a loan application sent where it's supposed to go. I mean, these are some really basic process issues that cause people not to be able to do their job. And it's not because they don't want to, it's because they don't know how to. And it takes a long time for that to settle in and for that culture to build and that understanding to grow in any kind of a branch banking office. Those folks are worried about losing their jobs. So it's really human behaviors that cause a lot of that decline, I think, in the areas that you see. The rise of fintech, obviously over the last 7 or 8 years, they've been available to pick up whatever slack is not there, right? They've been able to come in and say, well, we can make you that loan. I'll tell you a little story. We had some fires in the area where I live last December, and especially in a little community called Ojai, the fire burned around the community. There was a gentleman who owned a coffee store. He owned a coffee store. He owned, and his whole life was building that and making income from doing that every day. His store was closed for 2 weeks. because nobody was in Ojai. They had to leave. When he came back, he called his lender, Cabbage, and said, geez, you know, I'm going to need a little time to pay you back. And they said, tough luck, pay us now. The way Cabbage works, if any of you don't know, they just sweep the money out of your account from your receipts every day, week, month, however often they do it. And he said, well, I can't do it. He said, well, that's too bad. So he came and visited our bank president because he happened to know him personally in the community and said, what am I going to do? And he said, well, we'll try to figure it out. And based on that conversation, our bank president, a couple of folks in our bank put together a lending program to help people who were impacted in this way. And we've made about 60 or 70 loans in about probably 2 months to small businesses without a whole lot of information because either it burned up or they didn't have it. But we were able to be their boots on the ground and to resolve some of those issues that a Cabbage couldn't resolve or wouldn't resolve because we knew them and because we were in the community and because our job is to lend money back into the community to make sure that there's economic vitality for all. So that's a long way of saying that I think community banks still do matter and they still can in their each little individual circumstances. My story is just one. Every community, I'm sure, has its own story. I covered that. Oh, I know what I wanted to say. Yay for SBA and yay for Live Oak Bank. That is an amazing story. The Small Business Administration has worked very hard to make sure that they were relevant over the last several years. We've worked hard with them. We are a preferred lender. But I think the story about Live Oak Bank is really interesting. An organization who identified a niche, who became really good at something, and is really making capital accessible, more capital than would have been anyway. I mean, that's a tremendous story, and it's something that I think any of us in community banking can learn from. That, you know, do what you do well, and go do a whole lot of it if you can. The SBA guarantee makes that a lot less risky, feel a lot less risky, but I think it's a tremendous story, and I really encourage you not to keep pursuing that. One thing I will say about the Live Oak story that I thought about is that their business model will have to have, when you continue your research, will have to have a lot to do with how they were able to do what they did. They must have great business development officers and they must have terrific incentive programs because those BDOs are intrepid and they know how to go find, smell out a loan wherever it may exist, even if it's in the far reaches of some banking desert. Ms. Lee's survey was really quite remarkable. There was an awful lot of information available. I guess what I took away from it is that I was glad to know that community banks are still seen as competition. Sometimes we wonder if we are, but we think we're competition, and we work hard to make that happen. I think one of the last things I'll leave you with is last night I had the opportunity to attend the reception, and I had a conversation with a very, very talented young researcher. I don't know if he's here in the room or not. But he said to me, he was so excited to talk to a banker. He said, you know, I've never been in a community bank. And so we had a little conversation about that. And I think maybe that's where the intersection of what I do and what all you do come together. I told him and invited him that if he wanted to come to a community bank, he'd come see me. And I would embed him, and he would be able to talk to anybody he wanted to talk to and ask any question he wanted to ask. He could shadow a banker if that's what he wanted to do. But that I really do think that the boots on the ground needs to be married with the data. The data is so interesting and it's so rich, but it becomes that much more rich when you have the opportunity to really interrogate the data by asking the people who do the work all day long every day and to see what they think about why things are the way they are. I've never met a small business person who didn't want to tell you his story or her story. I've never met a banker who didn't want to tell you theirs. So for all of you researchers out there in the audience, I would tell you that I think one of the things CDAC has done very well is when they created CDAC, they brought us bankers in, and the governor said, we want to hear the anecdotes. The data's really important. We've got tons of it. We're buried in it. But we want to know from you, what is the data not telling us? And for me, that was a really enriching experience. I think we can be helpful to you. And if I would ask any community banker in this room, raise your hand and let these researchers know you want to be part of the solution. So thank you very much.